Your interest rate can save you or cost you thousands of dollars. If you're planning to finance your next car, you need to watch this video. What's up, winners? My name is Naam. If you're new here, we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. From a personal finance standpoint, financing a car is probably one of the most expensive ways of driving a vehicle. But I get it. It's unavoidable at times because you don't have the means to buy a car straight up cash, or you're just planning to own a car for a long period of time. So this video is going to be more targeted towards individuals who have discrepancies or delinquencies on their credit and looking to clean up their credit to get the best possible deal. But if you're an individual who doesn't have anything wrong with their credit, all of the steps that will be shared with you in this video may improve your credit so much higher so you can get a better interest rate. The first thing that I wanted to talk about is how your credit score affects your interest rate. Of course, there are other calculations that go into the loan process. This can be your income, how much debt that you currently have, and other factors. But the main focus in today's video is your credit. There are multiple charts on the internet that shows your rates and your credit score. So I pulled this one off the Experience website. Each lender, they will also have their own chart as well. Like if you're getting financing with Toyota Financial or BMW Financial, depending on your credit score, they'll place you in different tiers. The tier that you're in will determine your interest rate. So using this chart, you can see that as a borrower, you can be labeled anywhere between deep subprime, which your credit score is below 580, up to super prime, where your credit score is above 720. Again, just take these numbers with a grain of salt because each lender will have their own criteria. So using this information right here, if you are a super prime borrower, the average new car rate is roughly around 3.65%. So on the lower end of the spectrum, let's just say that you are a subprime borrower where your credit score is between 580 and 619. Your interest rate is going to be roughly around 11.92%. So for the average cost of a medium-sized sedan, which roughly costs around $25,000, if you are a super prime borrower, the amount that you will be paying in interest will be $2,388 over the life of your loan. On the other hand, if you are a subprime borrower, this will cost you $8,306. This is more than 3 times as much. Whether you're thinking about buying a new, used, or a lease, if you're thinking about financing a car one way or another, your interest rate can be a big determining factor on how much you pay. So since you kind of have an understanding of how credit scores have a big impact on your interest rates, now let's talk more about auto credit scores. The thing about credit scores is that there are so many different type of flavors. There are different type of FICOs, different type of Vantage scores, and there are thousands of other credit bureaus that have their own credit models. But the main focus in today's video will be FICO scores. Roughly 90% of the industry uses FICO scores. When it comes down to auto financing, the key player in most cases will be your FICO Auto Enhanced scores or Auto Industry Option scores. The key difference between regular FICO scores and FICO Auto scores is that auto scores will factor more heavily on how you manage previous auto credit or financing. Because most car lenders, they really care about how you paid off your previous auto loans. And this particular FICO score will do just that. Some of the information that Auto Enhanced credit scores will give lenders is how you made payments on previous auto loans or leases, if you ever settled on any previous auto loans or leases, repossessions, any auto loans that went to collections, or if any auto loans or leases that were included in a bankruptcy. So if you had any delinquencies when it pertains to auto loans or leases, this will have a significant impact on your auto FICO score. The only place where you can get all 3 FICO scores alongside with your Auto Enhanced FICO scores is myfico.com. This will run you roughly around $30 to $40. Really, there's no need for a subscription, but once you are planning to finance a car, it is a good idea to know where you stand. When it comes down to credit scores and what interest rates that you will be charged, car dealerships, they make most of their money in financing. So depending on the credit scores that they do use, this is where they determine how much money that they will make. So financial managers, they will have something called a credit spread. So if they were to use the lowest credit score, which in turn will give you the highest interest rate, this will make them more money on their end. Depending on the car dealership, they may pull your FICO Auto scores and also your traditional FICO scores. The majority of the time, this will be your FICO 8. So it is really key to figure out what credit scores that they're actually basing your interest rate off of, so you don't get ripped off with a much higher interest rate than you should have gotten. But how does knowing your credit score help you on your next car? The key thing that you need to know about lenders is what credit reporting agencies that they use. Is it from TransUnion, Equifax, or Experian? Because if you had any delinquencies or negative marks on previous auto loans or financing, then you may want to go with a lender who uses traditional FICO scores. Next, you want to know what credit tier that you fall in. All financial managers will have a chart ranging their interest rates and credit scores. If they really want your business, you may request for a credit tier boost. So let's just say that based off your credit score that you're in tier 4. They can bump you up to tier 3, which will result in paying less interest. Again, this really depends on the financial manager they may or may not do this, but it's always worth asking. The truth is that any type of delinquency will affect your traditional FICO score, but it will have a lesser effect compared to your FICO auto score. Here, let me show you a chart comparing different FICO scoring models. If your FICO score is 589, then your auto FICO score will be 595. And if your FICO score is 716, your auto FICO score will be 714. As you can see, this correlation is very close. But when you're very close between prime and subprime borrowing, a couple of points can make a big difference on the interest that you will be charged. Now this brings me on to my next topic, which is your time frame. The time frame that I would suggest planning is anywhere between 60 days all the way up to 8 months. Everybody's credit history and situation is different. Depending on what you have on your credit report, some items can be resolved much sooner than others. If you just have a bunch of hard inquiries that you would like to dispute prior to financing a car, this will roughly take around 60 days to see any results from that. But let's just say that you had a few collection accounts, late payments, or any other type of delinquencies, it may take much longer to get those items disputed and resolved. As a side note, if you do need some help with your credit, I do have a credit repair agency. Contact information is in the description. Based on my own personal experience from working with many clients, most of the results can be seen anywhere between 6 to 10 months. Because it takes multiple rounds of disputing and fighting with the credit bureaus to make sure that the information is valid before we can get them removed. Unfortunately, there are no shortcuts to this. There are other things that you can do on your own that will have a significant impact on your credit score, so when it comes time to shop around for auto financing, you will get much better rates. One of the best ways is getting rid of debt. If you have any balances on credit cards, but paying down these balances, this is a surefire way of improving your credit score. 30% of your credit profile is credit utilization. Essentially, this is the amount of money that you owe. The lower that you can keep this number, the better off your credit score will be. The next thing is to stop applying for new lines of credit if you're planning to apply for an auto loan. Anytime you apply for new lines of credit, this will result in a hard inquiry. Hard inquiries will generally bring down your score anywhere between 3 to 7 points. So now let's talk about the actual process of cleaning up your credit. The first thing that you must do is get access to your credit report. If you sign up for MyFICO, you should have been able to get access to your credit reports there. You need to look at all 3 of the credit bureaus. This is TransUnion, Equifax, and Experian. Once you get access to your credit report, the first thing you need to look at is your personal information. Make sure that your names and your addresses are correct. Any misspellings or old addresses need to get removed. Now you need to review all of your delinquencies if you have any. This is your late accounts, your charge-offs, or collection accounts. If you have any of these delinquent marks, it is time to look at everything line by line and do a very thorough inspection of everything. If any type of information does not line up or you can't recall these accounts, then it is time to dispute them. I recommend disputing these items by mail rather than doing it online. The reason being is that when you dispute items online, you lose a lot of your rights in the verification process. So that's like a quick rundown of how you dispute items on your credit report. If you want more in-depth explanations, I did do a full video on hard inquiries and removing late payments, so all the links are in the description below. Now this moves me on to my next point, which is trade lines. I know there are many people who is going to ask about this, so I gotta cover it. In a nutshell, trade lines are essentially just a credit profile. This can be revolving lines of credit such as credit cards or installment lines of credit such as loans or mortgages. When it comes down to trade lines of what auto lenders will tend to look at, this will be more towards installment loans. Because when you really think about it, whether you lease or buying a new or used vehicle, it is an installment loan. You are paying a fixed amount every single month until the balance is paid off. There are a few ways to add more trade lines to your credit report. You can either get added on as an authorized user or on another person's credit card account or co-sign for another person's loan. A second option is to actually purchase an authorized user slot on another person's credit card account. But what does this actually mean when it comes down to getting the best interest rate on your next car? If you have had any auto-related delinquencies within the past 6 to 8 months, trade lines will have no effect on your auto credit score. Another thing to worry about when purchasing authorized user trade lines is that you can actually get in trouble. If you have trade lines that do not belong to you or a family member that's on your credit report, the lenders can actually report you as loan fraud. Also, trade lines tend to not have a lasting effect on your credit report. They have much more of a significant impact when it hits your credit report, and as time goes by, it will be less. So if you have any negative auto history, in this situation, your money is much better spent on repairing your own credit rather than buying trade lines. Now let's talk about refinancing, because I understand that everybody's situation is a little bit different and they may not have enough time to plan out everything, or they're just watching this video for the first time and they recently just purchased a car. When it comes down to refinancing, there are some things that you have to think about to make sure that it's worth it. Obviously, the best time to refinance a vehicle is if you can get a much better rate than you had previously. If you have been working on your credit and paying down your debts, your credit score should be much higher than it was previously, so it may be a great time to reconsider a refinance. When you refinance the car, your monthly payments should be much lower than it was previously as well. One thing to keep in mind is not stretching your loan longer than it was previously. So let's just say that you previously had a 60-month loan and after a year goes by, you decide to refinance. You should only refinance with the 48-month loan term. Do not stretch out the loan for another 60 months or 72 months. Even with a lower interest rate, the longer that you stretch out loans, the more interest that you would tally up. And in turn, that refinance really did not do anything for you. By going this route, you will more likely be upside down. This is where your vehicle is worth much less than the amount of money that you owe. So whenever it comes time to get rid of a car or it just stops working, you may have to carry that balance to a new loan or you would just have to pay it off. Now let's move on to our next topic, which is shopping around for rates. You should set aside at least 2 weeks when you are shopping around, mainly due to the fact that all of these hard inquiries will have a less of an effect on your credit score when they're all bunched together. The best places to start is with your local banks or credit unions because they tend to be more friendly with rates. Because before you step foot into a dealer's lot, you're gonna have a general idea of how much you qualify for and what rates that you will be paying. Also, another key thing to remember is not to focus on the monthly payments. Focus on the total finance amount. This is the exact amount of money that you would be paying over the course of your loan. Many lenders and car salesmen, they tend to focus on the payments so they can stretch out the loan much longer and make it seem like you're paying much less, but in reality, you're paying much more. So before I go, if you guys want some free stocks, you can get one with Robinhood or 4 with Webull. Links are in the description. Alright guys, so that pretty much does it for me. I'll see you guys in my next videos.